Right, welcome back to another AriasWave Bitcoin video. Now, this is where I get serious. Enough with the shit talking, enough with the voodoo talk, Zulu, Hulu, Bulu, Dulu bullshit, right? I'm here to actually talk about the main pattern, which I talked about in the first market update recently, probably a couple of weeks ago. Now, the reason I'm going to get serious is because if I talk a whole bunch of shit and I'm bullish, people like it, right? They don't give a shit that I'm talking shit because I'm bullish. And this is actually quite funny because if I was talking sensible and bearish, I would get more haters on me. So this is a very important point I want to make when looking at the markets, especially when you're posting ideas. So these days I tend to not care about who thinks what, but it's more about for me to sort of get a GPS on the market using AriasWave. So the title being, Bitcoin is in a corrective pattern basically since 2013 means that the first move was a 5-wave move. It was the impulsive part of the move, right? So since 2010 up to 2013, to me, I count that as the impulsive move, right? Now that's the one that needs, eventually it's going to have an equal part move, right? So you know how you have a zigzag. If you're looking at it in Elliott Wave terms, which by the way, need to remind you again, this is not Elliott Wave. This is a methodology I created over a 10-year period. It includes backtesting. It's actually a little bit different. So this being a very huge, giant zigzag unfolding, well, you can get expanded corrections. But I just want to talk about a zigzag in general. If you're looking at it from, I suppose, an Elliott Wave perspective, which by the way, I would not do if I was you. Elliott Wave seems to think that, there's an ABC correction most of the time. Sometimes it could be a flat, blah, 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 all this bullshit, right? Well, AriasWave takes it one step further. But in this scenario, I just want to highlight a point. The first move usually has an equal move after that, right? Now, this part is BS. I could show you what the real pattern is, but I'll do that a little bit later. So we're going to need one of these moves to equal the first move eventually, right? But this has not happened yet. This is not what you're seeing on this chart. This move is pure, it's a pure bubble, right? It's purely a bubble because of the way that money printing happens, because of the way that everything has been since 2008, right? The GFC, right? Since COVID, right? COVID has only just continued the BS that's going on in the monetary system, right? The inflation that keeps on giving back diminishing returns, basically, right? If you want to look at it that way. So, okay, taking a look at it from the perspective of AriasWave, okay, so what is really in a correction? Well, it's not just a zigzag. It's actually 5 waves of correction, right? So I'll continue this. So you have a B, a C, right? And I'll do this properly here just for this moment. And I'll give you an example of an expanded D wave, right? I'm not going to draw the full correction within, but I'm going to show you how sometimes corrections can expand, right? It doesn't mean you're not going to get, hang on, let me just fix this up a little bit. So let's just say we have a type 1 expanded correction, right? So you're going to get price on the E wave come back to retest the end of the first move, right? Right there. Okay, right there. So then you're going to get the move that continues higher, right? So in this particular case, you can see that I've drawn that white line here at the end of the first move, right? You've got an A, B, C. That happened straight away in one hit. So it wasn't a case of A, B, C flat or whatever Elliott Wave wants to call it. It was this type of thing, right? A, B, C. The D is what you're seeing here up here. This is not a trend that is going to continue. Look, if you're looking at it through the lens of AriasWave, this is what I'm saying. Yes, this is what I'm saying. If you're looking at it for whatever other lens, well, good luck to you. Go produce an idea somewhere else. This obviously doesn't apply to you. But if you just take a look at it logically, you can see a couple of things going on, right? You can see that you have the first part of a zigzag and you have the second part of a zigzag. Internals are, once again, a copy of the entire pattern. In my first market update video, I did explain to you how we are in an expanded wave D of a wave D of a larger wave D. Is it any surprise that money printing and the type of monetary policies that we have in place today causes this type of bubbles to happen? It's really not a surprise. Okay. Now, am I saying that Bitcoin is going to crash once it hits 276,000 or somewhere in between that and 311,000? Am I saying that price is going to crash back down to that level at the the beginning of the first move? That's a type 1 correction. Okay? That's not the only type of correction you can have, right? You can also have a type 2 where the wave E ends far above the wave A. But given the weakness in this trend compared to the first move up, look, the reason why you had this type of move back here, right, in 2015 to 2017 is because it's corrective, right? It is corrective, right? That's why I was confused the whole time back then. It's because it's one of those patterns that you gotta wait. You gotta wait to see what the hell's baked in the cake because it's baked in the cake, right? You just can't see it until the cake is baked. And that's why it's taken me this long to make this video because it's something that you can really see in hindsight. But the hindsight clues give you a bit of an edge if you know you follow some steps correctly. But I'm not saying that I'm going to be waiting for this blah blah. Look, at this point in time, that's irrelevant, right? Because this video is not about where Bitcoin is crashing to. It's a little bit about the underlying mechanics based on the AriasWave methodology, right? So at this point, it looks like we're in the late stage of the C wave of the internal D wave of the larger B wave correction, right? So the B wave being the one that we're waiting for to complete. Now, and then we're going to get an equal parts move to the upside, which if you take that move, the first part, right? Why not do this for fun, because everything's fun, right? So let's just take that move from the dotted line and you project it higher, you've got a target of roughly $140 million. Does that seem crazy to you? Bitcoin, $140 million? I don't know. You're the one who's bullish. You're the one who's all, in the craze. Whatever. It doesn't matter, right? The point is that it could go lower and then produce a lower figure because the lower the E wave, the lower the ultimate target will be. So that's some food for thought right there. I'm not going to get into that. There is more I could say on that. There is heaps more I could say on this, and I probably will say a little bit more in the future. But for now, I want to make a comparison to how this analysis fits into a coin that I like, that I think has some potential, and that is, wow, it's a shit coin, it's an altcoin, whatever you want to call it. I'd like to apply it to Thor Chain. Right, so let's just go to Thor Chain for a minute, and I want you to just take a little bit of a look at this. Just observe that for a second. Right, so it's following the same principle, even though we can see that this thing came out in 2020. Right, it produced a fairly sizable, decent thrust of about 6,000%. And then it came back down in what appears to be a 5-wave move, followed by another 5-wave move. So what kind of weird ass pattern does that? Because if you think about it in the terms of AriasWave, there's no such pattern, right? And in AriasWave, there's no such thing as truncation, right? That's an Elliott Wave thing. Truncation does not exist in AriasWave. So the only thing that I could suggest is happening here is that Thor Chain is getting ready to launch in a wave 3. It's going to be a late part of the late stage of the Bitcoin bull market. Now, why would I think such a thing? right? Well, I just explained it to you in the Bitcoin chart. If you didn't really put two and two together, then there's not much I can do for someone like you, right? But if you understand where I'm coming from, you can see that there is a 5-wave move followed by a correction, right? Now, is this labeling 100% correct? Probably not. I think there might be some flaws in that at this point. But just to get the conversation started, I wanted to say, at least the ABC might be correct. The A is correct, I believe. The B is correct, I believe. The C wave, however, might still be completing. Why? Because it was such a sharp move with no alternation between waves 2 and 4. So yes, I used the word alternation, and that also exists in AriasWave because I took the best of Elliott Wave and threw out the garbage. And I added a few more things, and voila, you have a perfect recipe for a nice wave methodology that actually can help you make money instead of lose it. Because that's what Elliott Wave did for me in the beginning, is it helped me lose money, faster than usual, which is probably why, it's mainstream. Because anything mainstream typically will suck. Anyway, so is this wave C completed? Look, I'm looking into it. But I reckon that if I can get a gauge on where if it's still part of a wave 4 of a wave C correction, I think that that's pretty cool because we're still able to buy at record low levels at the moment. Given that the structure is setting up for a move higher, sure, we could wait for a break of the highs at $21. But when you can buy at $1.20 roughly, and dollar cost average, and you're looking at the setup, you understand AriasWave, you can see that there's a reason to think that this could go higher. I'd be suggesting that this is going to go a lot higher if wave 1 is this big. We haven't broke support. Support cannot be broken. If support is broken, this whole idea, it's irrelevant, right? It doesn't make sense. It wouldn't work in AriasWave terms. But if this, support level holds from 2023 June, whatever, then you know what? I would say that there's a very good chance that this could follow the Bitcoin pattern in a late stage Bitcoin bull market. So that right there is an example of how that works. But if I had to take you over to Ethereum once more, just to, because I have polished the chart up this time, right? I did polish up the chart and it's the same thing, right? I believe it's the same thing in a little bit more of a sort of weirder way, right? Now, you have the A wave here, you had the A, B, C, the D was large E, and I think now you have a 1, 2, 1, 2. I think you have a 1, 2, 1, 2. I mean, this pattern is highly weird, right? But you can see that this trend, the strength of the trend here is complete crap compared to the original move. So, the zigzag idea holds credence because to me it's got a shit trend. So all it needs to do is try to hit the target and it'll completely fall apart. And that's where we get the wave E idea from, and this could fall back down dramatically, right? Because we're talking AriasWave here in terms of the pattern. So now to finish this off, I want to go back to the BLX and I just want to cover off one more thing that's interesting. So, okay, so we had the A, we also had another A, B, C in here, right? Followed by the D. So basically, 2 times you get the large D, no pun intended, right? You get the A, B, C, expanding D, you get the first part again, A, B, C, and then a large D, right? Now, what makes me think that that's right? Well, I did the analysis, it checks out pretty good. And the thing is that it's actually quite funny because doing this analysis leads me to basically see the same thing on repeat a couple of times, which is very interesting, I must admit, right? So I go A, B, C, no, sorry, A, what am I saying? A, B, C, D, E. That's what this was. That's what this was here. This was a D. It was a D wave, right? And that's why you had this price dip only to make one more high before crashing, is because that was an internal B wave correction inside another D wave. And that there is, to me, the crux of this analysis. When I saw that for the first time, probably like a few months ago, I had never paid attention to this in that way. And it took me a very long time to come to this sort of conclusion. But it's the only way that any altcoin will make sense. And it really does spell out what's happening, especially when you look at altcoin season coming after a Bitcoin rally has started, right? I don't believe in the whole 4-year cycle up bullshit, right? I think that, that's form fitting and it's following a nice little curve. But when you get to end of D waves across the board, especially, in global markets, I think that you have some repercussions to deal with. And that kind of takes away that whole idea that, markets are moving in a rhythm and you've got all your Bollinger Bands or your 50 million moving averages all striped out in a row following price beautifully up in an uptrend. But when you're dealing with a D wave, that thing can come to an abrupt end and it can actually fall back down. And as I've mentioned before, it can sometimes be not pretty. But given that this is a historical point in history where this sort of thing is happening, I would encourage you to stay tuned for further updates and maybe leave some comments on what kind of coins you would like me to compare with this Bitcoin pattern in order to try and maybe get some price targets for you. Subscriber requests, that type of thing. Yeah, and the more data, the more historical data that you have in your coin, the better. Obviously, not something that came out yesterday or last week or last month, right? Give me something with at least a couple of years, or maybe like at least 5 years. That'd be good. But if you're talking, something shorter than that, it's probably not going to end. It's not going to go well for me with trying to decipher that type of jigsaw puzzle that you frighten me. But like I said, the longer the you know the historical data, there's more chances I can see how these patterns fit in, just like Ethereum, just like XLM, XRP, that type of thing. So if you like this video, give it a boost, and I'll catch you in the next one.